Investors grabbing up GrubHub. Shares the delivery service soaring as much as 17% today. On reports, it's hired financial advisors for a possible sale. Other stocks that are sort of around that space, Uber with Uber Eats, Yelp, they review restaurants, also rallying on this report. Dan, do you think there could be much more to the story?
Listen, there was a time last year when VC was investing in this in private markets, and they really loved this whole theme. They like it much less now. They don't like it in part of Uber either. So I'm not really sure about what sort of scenarios. I haven't given it a whole heck of a lot of thought where you put some combinations together and the two pieces together are worth more than what they are right now. We've seen a lot of money just lit on fire in the last 24 months trying to do exactly what these guys do. And I think the peak-to-trough decline that we saw over the last year in GrubHub tells you that there's a lot of competition. Sales growth for this company has just ground to a halt. It's going to be maybe 12% this year, 12% next. So I'm not certain. I don't think you go out and buy it because they might get sold.
I tend to agree. I think this is the area where you sell the stock. You just went 30 to 60 over the last couple months. You had what looked like capitulative volume today, 20 million shares. I think that's a good enough reason to let it go here. You're right back at the 200. Again, we failed here before. Things in downtrend should be sold at the 200. I think GrubHub is the epitome of that.
Any other play? Do you buy an Uber on this news, Guy? Because if GrubHub sells itself or maybe changes its model and you got Uber Eats sitting out there, does that make it look more attractive?
No, I don't think for Uber. I mean, I'll stay long Lyft, I think, is a name that will continue to prove itself. I mean, the quarters have been good and they have a pathway to profitability. We've talked about that. I'd push back a little bit here on GrubHub. I mean, if you go back in November, we broke down from 59 in a meaningful way. I mean, I know that's not that far from here, but that's another 8%. So I do think there's further upside. I think these things tend to overshoot to the downside. And in this case, I think it'll overshoot to the upside.
And back to these IPOs that are rallying a bit. I mean, in Uber's case, I don't think there's an invisible sun on this one. I think you actually have a case where there's been a lot of bad news for this company. And although we said it's going to get better and it's too complicated, maybe they'll divest Uber Eats and no, they have to become profitable.
Jim Cramer had a great tweet on Uber Eats. Basically had a picture of Uber Eats and he said, sell this stupid business. That was his word. And the stock will go to 40. I think he agrees there's no synchronicity.
If you watch the show here, I mean, we've been talking about that thematically, the Lyft versus Uber. I mean, VCs were just pouring money into Uber. They wanted more geographies. They wanted more businesses. They wanted more leverage.
Well, everything they did was magic at one point.
But the point is, public investors would love to see a more focused business, and that's one of the reasons. What are you doing?
It's all Police lyrics, the band Police, if you have missed it.
Yeah, I'm in synchronicity on this one.
Oh, you okay? Yeah. I'm sorry. I didn't know if you weren't playing the game with us.
Okay, well, the upshot, my point is,
somewhere having tea in the Sahara.